Good afternoon, traders, and welcome to the Hot Stocks Outlook for March 2nd, 2017. Welcome to the third trading month of the year, and boy, has this start to the year been extremely exciting, with the equity markets really being the hottest market in town. Now, we're going to go ahead and, as always, look at some opportunities in the marketplace, how you could have positioned yourself and made a lot of money in these trades. But the most important thing is to really understand as a trader, how am I making trading decisions day in and day out? And this is really where the VantagePoint Intermarket analysis software really helps us a great deal in that regard, so that we can recognize trends in the market early, so that when that volatility really comes into the market, like we've seen this last week, you're already in the market prepared to make a lot of money on that upside, in this case, or the downside when stocks are going down. And that's what's great about the software, is whether markets are moving up or moving lower, the software is predictive. It's predicting where are the probabilities, where is this market likely to move next. So again, you can be in those trends early and prepared to make money. Now, we're going to start here with Builders FirstSource, but important to understand, what this software does, what this technology does is, it's actually using a type of artificial intelligence known as neural networks to analyze how other markets are affecting and influencing the markets that you're trading, that you're putting your capital at risk in. And so, when you really think about how dynamic the markets are, stocks can share correlations with, other stocks, right? Stocks that trade similarly or have similar businesses. Stocks can share correlations and inverse correlations with the commodity markets, whether that's things like oil, the dollar index, which is what you're using to buy the stocks, the gold market, the S&P 500. So very important, those big macro commodity markets. And then there's also things like the ETFs. So you have, people coming in and buying huge amounts of ETFs, which are spreading essentially investment all across the market. And so this creates an extremely dynamic environment, and you really need a tool that can analyze and summarize how those other markets are influencing the markets that you have money in. Because, a lot of times these other markets can start moving and really affect the stocks that you're trading and really get you in a bad place that you don't want to be in. So this is how the software really helps us. Very sophisticated technology going on behind the hood there. But what's very important to understand for traders, the actual practitioners of utilizing this tool, is understanding, okay, well, as a trader, how do I need to use these tools going forward? How do they work so I can make those trading decisions? And again, get in on these trends early so you can make money when that volatility really starts coming into the market. Now, we have the price data going all the way back to February here, so about a month's data here in this stock. And you're going to see that we have a black line on the screen and also a blue line. Now, the black line on the screen there, that is a simple moving average. Very, very common indicator. You hear them talk about it in the financial news about the 50, the 100, the 200-day moving average. Well, one of the issues with a simple moving average is that all the calculation that goes into generating that value for you is based in the past. It's always just looking back at those 10, 15, 200 days. And so one of the issues is we need to know as traders, well, what can we expect moving forward to really help us and guide us where do we want to be long, where do we want to be short? Now, a simple moving average is a very simple calculation, right? It's just going to take, let's say, 10 close prices, add those all together, and divide by 10. Very, very simple. Now, against the price data, and on top of that black line in this case, you're going to see that there's also a blue line there. And this is what's very, very important, is this is VantagePoint's proprietary predicted moving average. And so for that value to be generated, again, it's utilizing the technology to analyze all those different market relationships. So again, the ETF market, competing in related stocks, the commodities markets, the dollar index. And so to plot that value, it's going to analyze all that information, and we can look at that as a comparison between this essentially simple moving average and predicted moving average. So where is this market expected to move moving forward? Now, important to understand here is if we've essentially got a comparison between, what the market's already done and where it's expected to go, we can really look at the separation between these values. And so when we have a lot of separation there, that's signaling a very strong trend moving forward. Now, to get in and really identify these trends early, you just need to understand that, really that first day when that blue line crosses above the black line, that represents a trend change. And if a market is changing its trend, that really represents a new opportunity and where we want to really focus our attention, because again, that's where you're going to get in on the trade early and make sure that you're, again, there for when that volatility really picks up in the marketplace. So black line over blue line, or blue line over black line in this case. And that's going to guide our decisions is what is the overall direction of this market. Now, before we go ahead and move forward to more of these opportunities here, we need to go ahead and explain this other indicator here at the bottom. This is the predicted neural index. Again, this indicator looking at those intermarket relationships, but not forecasting trend for you. You know, it's not really looking at is the trend up or is the trend down. This is a very short-term indicator. It can only be a value of a 1 or a 0. So very, very straightforward. And it's looking ahead 2 trading days. So what it's doing is forecasting short-term strength or weakness over the next 48 hours or 2 trading candles. And so this is very important to understand, because as traders, you not only need to understand, okay, where's the trend headed? So should I be long? Should I be short? But what should I expect over the next 48 hours? Should I be buying more? Should I be getting defensive? Should I be trying to get better prices on the stock that I'm trading? And so if we look at this forecast moving forward, what we're going to see is, okay, well, we've gotten a crossover to the upside. We want to also make sure that that neural index essentially should be at a 1, matching that behavior. And that signals to us that, look, now's the time to go ahead and get involved in the market. Now's the time to take long positions, buy call options. If you're a shorter term or day trader, be buying on those dips, trying to target those profit targets higher up over the next couple of trading days. But we see since that crossover occurred, since the market was essentially forecasted to reverse, Builders FirstSource up 25, almost 26% in just 16 trading days, about $3 per share. So, even if you just bought 1,000 shares or 10 option contracts, or however you want to go about it with your style, that is a huge opportunity to make $3,000 essentially in the month of February here. So this market's still a big gap yesterday and possibly going much higher. But this is the whole key to getting in on opportunities early so that you're able to be in that position ahead of time and making money when that volatility picks up. One more thing I do want to focus on before we get to all these other opportunities, again, using the same logic that we're using here, is that look at this neural index where, it's remaining up at a 1, saying, look, be buying this stock, the trend is up, huge amount of separation between the blue line and the black line, but you do get this dip in the neural index here, signaling what? That there's going to be weakness over the next 48 hours. And certainly that's what you see over these trading periods. But once that neural index gets back up to a 1, you certainly want to make sure that you're long the market. So, regardless of your style, again, it's about adapting to the changing market conditions. And when you understand that, hey, yeah, I've gotten in on a great trend here at the beginning of February. We've caught this nice little ride up, but you need to hold your position over the next week while this weakness comes into the market, because the trend clearly still up, but that's the last thing you want to do, is be getting out of the market, and therefore this opportunity at that point there. And you see that the software is going to correct itself and go, okay, well, now's the time to really make sure that not only in the short term should you be in the market, but the trend is still up. Make sure you're in there for that huge explosion from about $12 to $14, $15 a share. Huge move there. So let's go ahead and move forward, look at some more opportunities here. I wanted to touch on Pulte Homes, which I talked about a couple of weeks ago. Really, I think about right here in the marketplace. And this is so critical here, where we'd gotten a crossover all the way back at the beginning of January. So for the past couple of months, you could have been positioned here making a lot of money to the upside. But this is what's so critically important here, is that you want to make sure that you stay in the market when the trend is still remaining up. So this was a great opportunity to the upside. Really since the crossover came through, the market was up about 14%. But you see that we never got that crossover to the downside, signaling that it was time to get out of this market, right? You see the blue line is still above the black line, saying, look, the trend is still up. So as a trader, you have to understand, okay, what is my game plan? How am I going to adapt to changing market conditions? And as long as that blue line remains above the black line, stay in the market, because the market's now moved up another 5% or $1 per share. And the last thing you want to be doing is getting out of your position too early and having you miss that huge explosion that we've seen really over the past week and past couple of days here in a lot of these stocks. Moving forward here now, it's not all, upside here in the market. There are some markets where there's some danger out there. And, this is a great example of how the software is going to keep you out of opportunities where you really don't have those probabilities on your side here. So Taser, a company a lot of people have been excited about, look, crossover to the downside, a lot of weakness in this neural index. So that 48-hour forecast warning you, look, do not be long in a market like this. There's a lot of danger here. And, since that forecast, we've gotten really the inverse of what we've seen in almost the entire market. The S&P moving up over 1% yesterday and Taser collapsing. And you can see clearly, designating that this market is in a downtrend. Over the short term, you don't want to be here either. Go ahead and make sure that you are short that market. And you've seen about 9% move to the downside in just really the second half of February here. So very important that, the software works the same way, whether it's the upside to the downside, and you can really go ahead and create a portfolio, really hedge yourself there with opportunities of markets moving up and markets moving lower. We talked a lot about the oil services sector over really the past couple of months. But, we've gotten this crossover to the downside here in Apache. And a lot of these stocks like Exxon and Hess and really, again, these oil services companies have not been doing well. But since that crossover came through, you see Apache down 20%. So, you could imagine of all the places to be positioned in the market while markets are moving up and everybody's making a lot of money, you do not want to be long a stock like this. Certainly want to have some put options or even go ahead and just short the shares and be making money on the downside as some of these stocks really get hammered over this time period. Now, last but not least, let's go ahead and look at Kate Spade here. So again, same logic, regardless of the markets you like to trade, you need to be consistent with how you interact with the marketplace. So, whether it's trading long positions, whether you trade options to the short side, you want to know, look, what is the direction of the market? Has there been a trend change? We see in Kate Spade here a crossover, blue line over black line, again, towards that first week of February. Neural index up at a 1, signaling, look, this market's going to start trending higher. You want to go ahead and make sure that you are long if you're taking any sort of position here on Kate Spade. And we've just seen a huge explosion in this stock, with stock moving up in 14 trading days, 28% in 14 trading days. So about 3 weeks of trading time. Huge opportunity to make a lot of money and really improve that equity on your overall trading account. So, I hope this has been helpful to all you guys out there. Some really fantastic opportunities happening all throughout the market. But of course, you got to be positioned ahead of time. So when that explosion of volatility comes in, you are in position, ready to go and prepared to make a lot of money in a really exciting market that we have right now. So as always, thank you all for watching. Best of luck to everyone out there in the marketplace. Again, this has been the Hot Stocks Outlook for March 2nd, 2017. Thank you for watching. Bye for now.